just to close off this segment, I'm going to put you guys in the hot seat, you know. Because look, let's be honest. The clients really love to hear how the brain trust articulates the economic situation. And they really like the capital market talk and the yields and all of that. But at the end of the day, the clients want to know where can they put their money. Now, Barita's investment outlook has a very nice section at the back called directional views, which breaks down each asset class by how Barita feels about it. It basically says this is what we like, we think. If you fit the criteria, you can put your money there. But we want to talk about equity now. What are 3 stocks on your radar based on the outlook that you would have just mentioned? Don't look for hands.
Let me go first. Let me go first so that then pick.
Pick what's left.
What left?
So all right. So quickly say about I like to look at equities within a framework, right? I have to look at capital allocation, how the companies are doing it. Do they have a solid management? How they treat it, investor relations. So those are 3 things that I keep in mind. With that in view, obviously the caveat is that I have to look at Barita, right? So that is that is a given. So Barita is not one of the 3. First one I would say is Seprod.
Okay.
Seprod is solid management. It is demonstrated in their performance how decisive the CEO is, essentially chopping off a lecherous
sugar.
Yes, a lecherous operation, which was a very difficult thing to do. And since then, they have engineered solid performance thus far. Core cash flow performance, right? And the outlook is bright, just given the portfolio of products that they have, SKUs, etc.
And I mean, it's a consumer staple-based company.
It's a consumer staple, right? Wisynco is another one. Notwithstanding their most recent performance.
The part thing a beat Wisynco.
Yeah, man. But the thing is, Warren Buffett used to say, listen, if you buy a certain thing for your household, like candy, right? You love candy, right? You really should be unhappy when the price of candy goes up, because you can't buy more, right? You love it, you don't love when the price goes down, right? In a nutshell, what I'm saying is that the recent performance with Wisynco is not detrimental. If the price falls off, I would say is a way to dip your feet in there a bit more. Solid trajectory, solid management.
And I think that Wisynco is one of the most resilient balance sheets.
It has one of the most resilient.
So they can do a lot more.
And yeah man, I know you have a so
they can afford to do that M&A.
You have a positive critique. In other words, you're saying that there's far more upside if they do a couple of things.
They should reach out to Barita if they really want to participate.
And what they have is an envious SKU, right? Stock keeping units.
Okay.
Right. What it means is basically, and I think they have it in their money. Don't quote me on it, but in their prospectus, I believe one of their ambitions is that no household in Jamaica should go 3 to 5 days without consuming something from their portfolio, right? Yeah. And they are huge. Right, so that in itself, again, is a very good tailwind for Wisynco.
So we have Seprod, we have Wisynco.
Right, choosing something from the financial side, I mean, it's a
Barita is a given.
Barita is a given, but NCBFG is one to watch, I would say. Cygnus as well. That's at 4, right? So let me go with NCBF. No,
taking all the good stuff.
Let me go with NCBF.
So I mean,
because I'm smart, that's
so who's next?
I'll go next.
All right.
So I think Richard really came in and he gave 3 of the really good ones out there. So just to add to Richardo's picks, I think Carib Cement is one to watch. And I mean we've mentioned this, construction has been resilient construction has been resilient. The government has continuously, made it its mandate to really broaden infrastructure in Jamaica.
Infrastructure.
Exactly. So within that framework, within that macro environment, obviously one of the companies that would likely benefit from that would be Carib Cement. I suppose it makes sense to pick one from the financials as well. Obviously, Barita is top of the list, but I think JMMB is fairly well positioned. Obviously, they would have actually seen some reduction in earnings given the overall macroeconomic issue brought on by the COVID-19.
Core earnings was still
it was pretty
good
decent.
for JMMB.
Yeah, it was pretty decent. So within that context and considering that the company is trading at a very low multiple, I think JMMB is a good place that persons can put their money. Now, the caveat to that is that the upside might take some time to be realized, as Harton had indicated before. Coming into 2021, seeing that we're still at the beginning, manufacturing companies are still positioned to basically be lifted by a rebound in the economy faster than the financials. So I mean, you have to shape your horizon, so to speak, in the context of where the economy is headed.
Yeah.
So you buy.
JMMB has that Sagicor
exposure
with the exposure with it,
So I mean, the horizon might be a bit longer. But in general, I believe that right there is a sweet spot in terms of allocating some capital to JMMB, and I think Richardo's Signos is also not a bad play. No, the recent results weren't the best because they have some FX exposure that can be a bit detrimental at times. But do remember that the company would have raised significant capital recently.
I always tell people that's literally how they make money.
Exactly.
They raise the money, then they invest it, and the interest income.
Yeah. And I mean, where we think about alternatives and where that is going, where that is headed, the Signos really just has a framework of just identifying companies that are really ripe for capital injection, right? So if we think about that over a long-term period, right, where we're thinking about the economy heading and everything, injecting capital into specific companies, really that can really drive returns coming out of the pandemic. And even if we think about beneficiaries of a recovery, we're thinking that small and medium-sized companies have a lot to gain as economic activity picks up. So within that framework, within that mindset, then Signos has quite a bit of upside. Again, we have to tailor that to the horizon.
All right, so we'll have Seprado, Cinco, NCB. We'll have Carib Cement, JMMB, and Signos. Richard said Signos too. So Harton, tell me your exclusive three.
No man, I have very solid three. So one I feel like everybody's skirted around.
But I said the ones that me I think about.
No man. I'm thinking mail pack, and I can tell you exactly why I'm saying mail pack. When you take into consideration the digitization of that would have been brought forward by COVID, in terms of moving or accelerating the digital era we're entering. What Mailpack offers in terms of its infrastructure, in terms of giving access essentially to the globe. You can see something online at a global marketplace or something like Amazon, and you're able to purchase it and then bring it into Jamaica through their infrastructure is significant, especially from a perspective of both household consumers as well as for institutions or companies or producers, because they want to bring in the raw materials. So what Mailpack offers is an opportunity for investors to get a global exposure, or for investors to get exposure to a company that is essentially bridging the gap between the global marketplace and our local consumers. And they also have a local arm, Mailpack Local, which partners with PriceSmart. So you can actually order items from PriceSmart through the Mailpack platform and have it delivered to you. So I believe, as a predator, right? So Mailpack is really one of those sleepers to really look out for, and again, is really in the play of digitization of the market. Another company I would definitely put up there, GK. what I would have seen, or Grace Kennedy, so what I would have seen recently that Grace Kennedy, they have created M&A arm, a merger and acquisition arm, and they've actually been focusing on a lot of consolidation to increase that cost, to decrease the cost of operations, so a cost management focus, while also expanding their global reach. They recently announced the combination of two competing entities, and they're going to put them into one operating facility, essentially to cut their costs. So what that shows to me that GK is understanding that, hey, while revenue is good, the bottom line is what really matters to equity holders. And now what that signals to me that they are understanding that cost optimization and removing redundancies, especially when you think about consideration of the conglomerate discount, which is, a company is worth more in parts than as a whole. When you take those things into consideration, GK is realizing that, hey, I need to make sure that I'm more of a solid company in entirety versus having individually performing parts. So GK is one of those companies to look out for going forward. And then my final pick, and again, I don't need to say Barita is in this pick naturally, but our last company I look out for is Panjam. Now, the reason why I put Panjam in that list of companies that leading into 2020, Panjam would have had a very well thought out portfolio of securities as well as private equity positions in individual companies. One of those being Sagicor. I think they own about the 30% of Sagicor, which has been a driving force for their bottom line. That is just patient capital. They just earn that money just by having that position, both through dividends and through capital appreciation in the share price. So I mean, they literally benefit when our Sagicor benefit, and that's a beautiful way to demonstrate how important alternative investments are, especially that private equity perspective. Not to also ignore the fact that they have a real estate portfolio that would have significantly been impacted in 2020 due to the restriction in traveling, and they also would have been impacted by the equity markets in terms of the decrease in equity prices in our local stock exchange. But what most persons would have ignored is that Panjam had over $2 billion in cash. So while asset prices would have significantly depreciated, it would have presented an opportunity for them to acquire additional security to put into their portfolio. So as the Jamaica Stock Exchange and any other security that they would have purchased globally would have rebounded, they themselves would have essentially ride a roller coaster up. Okay, you really want to buy when asset prices are low and sell when asset prices are high. And with $2 billion in cash on your balance sheet, I mean, that provided the best opportunity for them to actually enter the market and do some slight buying here and there. And then now, just again, their patient capital, just for us to realize that now as the stock market begins to rebound. So those would be my top 3 picks, with Barita being it as well. So
I mean, and let me just mention that for me, well, luckily you guys didn't say the ones that I was thinking about, but I've been looking at Fastwitch recently. The company has articulated plans over the last few months. Matter of fact, I think they even said it before, to go into solar. Most recently, since maybe this week or last week, they mentioned a partnership with Huawei. So I think that maybe at the start of the year, they may be a bit pressured in terms of the investments that they have to make towards that goal. But certainly it's one that I'm looking forward to. I think that but I agree with Mailpack, but I won't speak on it since he spoke on it already. I agree with Awa as it pertains to exposure to construction. One of the ways that we can do that to raw construction is through Berger and Lumber. So outside of carb cement, from a valuation perspective, I'd probably go with Lumber at the moment. And I guess the third one, well, I want to say it would be between JMB and Lab. The Lab, because I think particularly in the marketing space, and I don't want to jump into Sean's area, but particularly within the marketing space, I think as consumers have kind of shifted the way that they absorb material, as we have had more work from home policies and people have interfaced more with technology, students mostly, but us as well. I think that space is prime for expansion, and one of the ways that I can get exposure to that is through Lab. Of course, that is contingent on them diversifying their portfolio of companies more. I think that JMB straight from a fundamental valuation basis. The last time I looked on the Barita weekly stock report, which is on the website, JMB was trading at below 9 times, by far the cheapest in the market. So if we were to expect a reasonable growth rate, given that they did provide decent core earnings for the last quarter, I think that their forward PE could be a bit much lower than that. Well, I would even say much, because there are implications from their extended exposure to that other financial institution. So maybe something in the 78 region, but certainly even within a normal environment, we would be jumping at a 78 valuation on any financial company, and financial companies typically trade between 10 and 15 times. So certainly I always say I'm biased as it pertains to Barita, because we would have seen the 68% growth recently in our profitability, and I work with you guys on a daily basis, and I know that you work 18 to 23 hours a day. No kidding. So I know that the amount of work that you put in is the reason why the company has performed like it is. Not just us and our unit, but every single person on the ground that at Barita is working to be a game changer, and certainly I believe that the company will be one to look forward to. And of course, we have to mention Derman Trading Company Limited, DTL. Derman would have emerged out of 2020 one of the companies with the most or the highest growth prospect for 2021, given the successful closing of their APO, where we raised a little over $4 billion for them to acquire 2 companies. So, of course, those 2 companies are expected to be accretive to earnings. And in addition, they expect some form of organic growth as well. Derman is currently trading at 261, last I checked. And with forward earnings, this can be easily a 10-11 times stock. So that's definitely something that I want to look at.